If you've been paying attention to the news, you probably have seen all the buzz about Kraft Heinz, as the company's stock has fallen big this last year. Now, in my last video, I did say that this company could make a huge comeback. And even though that is so, is now really the time to start buying this stock? Well, that's what we're going to get into today. But before we do that, make sure you give this video a huge thumbs up if you appreciate all the research I did. I'd really appreciate it. So let's get into this. So when it comes to Kraft Heinz, there's a lot going for this company. I mean, first off, they have the new CEO, Miguel Patricio, who's coming in on July 1st. Now, Miguel Patricio is expected to help this company turn around big time. He did incredible at Anheuser-Busch when he used to work there, and he's an incredible marketer. Second, we see the company starting to now invest a little into healthier alternatives. And this is something that the company should have done a long time ago, and it's great to see them investing some now. Now, again, they're only investing a very small amount into healthier alternatives, but again, something is better than nothing. Third, the company is trading below its book value, meaning that the stock is being valued less than the value of all of the company's assets. And fourth, we got old man Buffett. Whenever you see Warren Buffett buying into a company, you always know it gives the company a little bit of cushion room, because there's one thing that you don't do. You don't short Warren Buffett. The guy has an incredible track record. So Warren Buffett is one of the biggest investors in Kraft Heinz. He did mention that he bought it too early in the past, but he's not selling his stake. So that's what's good. It's happy to see that he's holding on to it. But although these are positives, they also can be viewed as negatives if we peel back the skin and look a little deeper. So let's look a little deeper and see how these positives could actually be risks. See, although Miguel Patricio is expected to be an incredible CEO, and although he did incredible at Kraft Heinz, we have to remember that it's going to take time for Miguel Patricio to turn this company around. It's not going to be an overnight thing. And although he's done great at Anheuser-Busch, we can't guarantee that he's going to do great at Kraft Heinz. Sometimes someone looks like they fit the bill, but they might not actually be the right person. Miguel Patricio looks like he's the right CEO, but until he's actually done the job, we can't actually say that he's the right one for the job. So it's nice just to pause and wait and see what he does. Second, it's nice to see Kraft Heinz investing in healthier alternatives. I mean, they're going in the right direction. But it may be hard for them to invest in more healthier alternatives in the future, as their competition is doing the same thing. See, companies like Pepsi, General Mills, and Coke are all seeing the importance of investing in healthier alternatives. And they have more cash relative to debt to spend than Kraft Heinz does. If we just take a moment to compare Kraft Heinz to a company like Mondelez International, we see that Mondelez has almost 5 times as much cash to invest and half as much debt compared to Kraft Heinz. So if there was a bidding war over healthier alternative companies, it's more likely that Mondelez or one of Kraft's competitors would buy up the company before Kraft could, because they would just continue to bid up the price and Kraft would no longer be able to afford the company, since most of them have more cash relative to debt. So in my eyes, the best way for Kraft Heinz to move forward into healthier alternatives is for them to make their own products and leverage their brand name, rather than trying to buy out already established brands. They simply don't have the cash or the resources to do so when we compare them to their competition. And third, it's true that Kraft Heinz trades below its book value. And although on the outside that might look like investors are undervaluing this company, but in reality, one of the main reasons this company is trading at such a low valuation is because investors are predicting that this company will have to write down the value of more of their brands coming in the future. As consumers continue to flee away from processed junk food, investors are also worried about how profitable this company will be in the short-term future. So although some of these may look like positives, they can also be viewed as negatives. So although I do feel like this company is going to make a huge comeback with Miguel Patricio at the head, I can't tell if that comeback is going to be in 6 months or in 6 years. So until I'm able to get a little more clarity about this company's future, until everything is put in place, I'd rather stand back on the sidelines and continue to watch this company, but not invest yet, because there's too much going on right now, and it's likely that the stock will just stay where it's at or continue to fall. So is now the time to buy for me? Honestly, no. I don't feel like now's the time for me to be buying this stock. To put it simply, this company's not worth the risk for me right now. So I'm still sitting on the sidelines, but I'll keep an eye on it. And I do think eventually this company's going to make a huge comeback. I just don't know when. If you agree or disagree with what I said today, let me know your thoughts in the comment section below. At the end of the day, this is just my opinion on the matter. And if you'd like me to review any other companies, again, throw a comment down there in the comment section below, and I'll be sure to do so. And remember, I'm not telling you to buy, sell, or hold this company. I'm simply telling you what I'm going to do, and any financial decisions you make are up to you and your financial advisor. See you next time. Peace.